A very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are on a grip of a corrective phase. Nifty couldn't hold on to the 18,000 mark as well, and Bank Nifty is also seeing almost 400-point cut. And that is quite surprising because this morning Asia was trading mostly in the gains, and there was nothing really upsetting about the commentary from US Fed. It was all on the expected lines. But market is falling under the weight of some of the Q3 updates which market may not have liked. For example, Bajaj Finance. Uh, the sequential growth over there is something market did not like. IT is coming under pressure. Barring a clutch of defensives, everything is actually in the red. Let's take the discussion on markets ahead, more from a portfolio perspective. And we've got Aishvarya Dadheech of Ambit Capital who's joining us today. Aishwarya, afternoon. Thank you so much for your time. I was looking at the commentary provided by you, and I was quite surprised to see a very contrarian view on mid-cap IT. IT, which is in the eye of the storm right now, is an area, particularly the mid-cap IT, which you like for portfolio perspective next 2 to 3 years. What kind of names do you have in your portfolio, or maybe what kind of earnings growth, superior earnings growth, do you see these mid-cap names can actually provide over the next 2 3 years, due to which you like them?
Thanks. Good afternoon, Ajay. Thanks for this opportunity. What we try to do at Ambit here is always try to stay ahead of the curve, right? We saw because of the rising rates by Fed of almost more than 400 bips in a very short period of time, there was cascading adverse impact on the IT and the growth stock globally as well as India, right? Where you've seen deep cut into IT stocks by almost more than 30%, 35%. And the valuation in 2021, which stretched to, very high level, are coming back to senses now. So we somehow believe that, there is an opportunity which lies into the IT space. The growth angle is something which we believe will remain under pressure for at least couple of quarters, and that's why we are getting these names at this attractive valuation. So we are very selective on IT names. We have in our portfolio players like Persistent, the players like Emphasis, which we believe we'll be able to maintain. Initially, the next couple of quarters, there will be low growth, right? But over the next 2 to 3 years, they can do almost more than 10-12% kind of revenue growth. And because, the headwinds of rising wage hike and other related cost is almost behind us. So that will also help us, to get higher earning growth of almost close to 12-15% minimum from the next 2 to 3 years. So we believe, that is what we see as an opportunity in the space right now. So any investors who want to make a healthy allocation to IT possibly is the right time over the next couple of quarters to add to the high quality IT stocks and stay put for the next 2 to 3 years. See, Ajay, this is the same strategy which we applied into the banking and the financial services last 2 years back, right? When we expected that the credit growth is expected to pick up, the kind of cleanliness which we witnessed in the balance sheets of the banks and NBFCs, and the valuations were very, very attractive at that point of time. And Street was not very vocal or excited about BFSI last 2 years back. That is the time we went ahead and increased our allocations to BFSI. This is similarly what we expect for IT stocks. And we should not forget, Ajay, that possibly we are at the fag end of the interest rate hike cycle, right? Possibly by mid of 2023, calendar 23, we will have a better clarity about picking about the interest rate, and possibly there will be time when we will see a pause in further hikes because inflation is expected to moderate from the second half of calendar 2023. So that could also be the time when we'll see a reversal in the valuations of technology stocks, whether it is Nasdaq or even in the Indian IT stock. So in short, possibly a couple of quarters of pain, but if you have a 2 to 3 years time frame, that could be a good opportunity to get into IT names from that perspective.
Sure. Ashwarya, I also see a lot of mid-tier financiers in your portfolio, especially the low-cost targeting kind of financiers. How's the growth there? What kind of cost of capital are these financiers facing? Because just today, not entirely comparable, but one of the large lenders is being massively punished in the market, Bajaj Finance, because market did not like the sequential growth which they have posted. Though yearly
Yes.
growth is 26%.
Yeah, so that's correct. We believe that majority of the investors are riding on very high hopes in the BFSI space, and in any disappointment in numbers are punished heavily because of the recent valuation stretch up that has happened into the large cap banks and large NBFCs. But if you look at from mid size and small size, we haven't seen much of a re-rating which has happened so far. Because if you look at the kind of credit growth which is happening, even the large players are getting mid-teens kind of a growth, which majority of the other small cap players or mid cap players are, showing us. So we haven't seen much of, as I said, valuation relating for them, and from the cost angle, right? Because they are not as competitive as compared to the large players. They have been able to manage their deposit franchise. I would say, not in I would say in a very right manner. They are not been getting punished that big way. So what we understand from our perspective that the re-rating is due for this mid cap NBFC's bank and small cap NBFC's bank, and that is about to follow over the next 2 to 3 quarters, because we, in spite of all the excitement, we still believe that the NBFC and the BFSI, including NBFCs and banks, are expected to report very strong numbers, right? Whether because of the higher credit growth, which we witnessed almost 70% for the last fortnight, and their ability to reprice their asset book, which will not have any adverse impact on the NI. So I think NI growth for this quarter at least should be 20% plus. Your credit growth is going to be strong, and because of the lower credit cost, your PAT growth should be about 20 to 25%. So there is a big opportunity for those mid caps and the small cap banks valuations to get re-rated for the next 2 quarters, and that is what we are playing through. Having said that, we also very watchful about entities who have a slightly stronger liability franchise. So we don't want to be with players where they are heavily adversely impacted because of the rising rate scenario which we are seeing right now. So that's why we are very selective in assessing which kind of stocks we have in our portfolios across mid and small cap. And we believe that 3 to 4 names which we are doing phenomenally well from growth perspective, as well as managing their names and growth in NI for the next 2 to 4 quarters. That is what gives us a lot of comfort from that perspective.
Aishwarya, also, I see you have moved a lot of positions away from auto OEMs to auto ancillaries. What kind of auto ancillary names you own, and uh, which category of auto ancillaries you like? Two wheeler, CVs, bus or tractor. What kind of parts, or ancillary parts do you like, or EVs also?
Basically, we don't follow fad, as right? So we stay away from trends and mega trends and things like that. That's very counterintuitive for a fund manager to say that. But we were used to like auto a lot. That's why we went ahead and got into TVS Motor into one of our fund, which is an OEM, which we believe is doing phenomenally well in tough times. And for our small cap fund, we got into players like Sundaram Fasteners. We got into players like Suprajit Engineering, which we believe are pretty diversified, which are a play on growth in two wheelers and PV. We are not very inclined toward CV as an entity because that is more related to economic growth and all. But we are more comfortable from PV and two wheeler side, and that is why we are playing through this. We also understand that normally. Your auto ancillary does well with a lag of 2 to 4 quarters after the movement or traction we see in OEMs, and we believe that though those last couple of months data is not very encouraging, but there is a lot of cushion in growth from two wheeler perspective as well as the PV perspective from OEM growth side, and I believe that will start have a positive rub off impact on the auto intelligence side over the next 2 to 4 quarters. That's why we are holding on to those names. Second is we always try to stay with leaders in the respective fields. So Sai Sundaram is the leading player in the fastener space. Suprajit is doing phenomenal job into the niche area which he is operating into. That gives them the pricing power and ability to manage margin in tough time. So these are the kind of players which we are holding into our funds in the auto ink side.
Right. All right, Aishwarya, thank you very much for your time. Good chatting as always. Let's take a short break on that note.